Imagine you are working hard, trying to do the right thing, looking for clarity when you seek financial advice from a professional, and instead, you get talked down to, dismissed, ignored, or it's sold something you don't understand and probably don't need. Hi, I'm Allie Jane Ayers, and this is Money Changes Everything. Who to hire to help pay your taxes? Why free advice is costing you a fortune. Key takeaways. Not all financial advice is good advice. Learn how your advisor gets paid before you trust them. A fiduciary, fee-only advisor can save you from costly mistakes you don't see coming. Build your money care team before something breaks, not after. The first time I got financial advice, I was 23, making about $30,000 a year, and genuinely excited to understand how a 401k worked. My employer had sent a rep from our 401k provider to offer free financial coaching. How nice, I thought. Maybe someone was finally going to explain what the hell I was supposed to invest in. Instead, the man in the suit told me I spent too much money. His advice was to stop buying shoes and move in with a relative to save on rent. That was it. No mention of my 401k, no guidance about investing, no celebrating me for contributing 6% of my small income to a retirement account at a time when I was barely covering rent. Fuck that guy. And that moment, that patronizing 401k meeting, set me up to mistrust financial advisors and to retreat further away from learning how to start to invest. Maybe you've had a similar experience. You want help. You're working hard, trying to do the right thing, looking for clarity, but instead you get talked down to, dismissed, ignored, or sold something you don't understand and probably don't need. That's the real problem with financial advice. It's not just the jargon or fine print, it's the way it makes people feel small. Well, now I am a financial advisor who actually invests people's money, and I sure as shit make sure they understand how to invest. I also offer about 15 different learning methods because not everyone is naturally good at understanding numbers in a spreadsheet or a pie chart. If you've ever tried to get financial help and left the meeting more confused, more frustrated, or just vaguely insulted, you're not alone. It happens constantly, especially if you're self-employed, creative, or your income looks anything but ordinary. And if you're a woman or a person of color or queer, forget it. And even when you do find someone to talk to, an accountant, a financial advisor, a friend who's good with spreadsheets, you still have to figure out whether they actually know what they're doing, whether they're legally obligated to act in your best interest, and whether they respect you enough to explain what the hell is going on without condescending to you. This is the problem. Getting financial advice often sucks. Not because people are bad, but because the system is messy, opaque, and full of hidden incentives. The burden falls on you, the person asking for help, to figure out who's competent, who's ethical, and who's selling you something. Why most advice feels so off. Bias is the invisible force shaping almost every conversation in financial services. Some of it is unconscious, and a lot of it is structural. Most financial advisors are old white dudes. That's just a fact. If you're a woman, a person of color, queer, under 40, not conventionally rich, or just someone who doesn't slot neatly into a traditional employment box, you've probably been dismissed, ignored, or talked over. I've lost count of how many creatives have told me they feel stupid when they talk to their accountant. And not because they are stupid, but because financial professionals often speak a language that wasn't designed for anyone outside of their own tribe. If you've ever thought, I'm not dumb, I just don't know what depreciation means, you're right, you're not dumb. You're just being forced to decode something that was never meant to be accessible to you in the first place. Financial advisors and accountants often operate inside rigid frameworks that don't make space for nuance or difference. They were trained on a specific kind of client, W-2 earners with steady income and standard deductions, Social Security income for retirees. When someone shows up with variable income, stock options, or a business that's deeply intertwined with their personal identity, most advisors don't know what to do with that. So they either ignore the complexity or they make you feel like it's your fault. Titles are marketing. How advisors get paid is everything. Financial advisor is not a regulated term. Anyone can use it, and plenty of people do, regardless of whether or not they have the relevant credentials, experience, or legal obligation to act in your best interest. That's why the first thing you need to ask any potential advisor is not, are you good? It's, how do you get paid? There are a few important payment models for financial advisors that I find the best. Fee-only fiduciaries get paid by the client. They don't earn commissions, they don't sell products, and they're legally obligated to act in your best interests. This is the gold standard, in my opinion. Fiduciaries can get paid in a few different ways. We can do hourly or project-based planners. They charge for their time and can be great for one-time decisions or financial triage. Subscription-based advisors offer ongoing support as a monthly rate, often with no investment minimums. AUM-based investment advisors charge a percentage of assets under management, that's that AUM. This can work well if you have substantial investments and want someone to handle them, but only if they also offer planning, not just portfolio babysitting. Once again, you have to make sure that they're a fee-only fiduciary. Then there are other models that, in my opinion, you should avoid. It doesn't make these people bad or breaking the law, I just think they're not the best models. Insurance agents calling themselves advisors while pushing overpriced whole life insurance policies that a lot of young people don't need. Annuity salesmen promising guaranteed income to retirees, divorcees, and anyone else feeling scared and overwhelmed. Bank reps who are limited to selling proprietary mutual funds with high fees and limited flexibility. Influencers with no qualifications, just affiliate links, my personal favorite. Don't focus on what someone calls themselves. Focus on how they're compensated, who they typically serve, and whether they're willing to explain things clearly without scaring you into submission. The problem isn't always the product these financial advisors are selling, it's the mismatch between what you need and what they're incentivized to sell. Anyone can call themselves a financial advisor, but only some of them are actually qualified to give advice. If you see CFP, that's a certified financial planner, CPA, that's a certified public accountant, or CFA, that's a chartered financial analyst, after someone's name, you're dealing with someone who has passed some pretty serious exams, met experience requirements, and is bound by a code of ethics. Everything else, it ranges from very useful to your specific situation to total fluff. So don't get dazzled by a string of letters after your advisor's name. Ask real questions. Ask, are you a fiduciary at all times? How do you get paid? What services are included in that fee? Who's your typical client? And how often will we actually talk? If they hesitate, deflect, or act offended by your line of questioning, walk away and find somebody else. Don't know where to start? Use a vetted directory like the XY Planning Network for CFPs who specialize in a new kind of financial planning, not just asset management for retirees. I am a proud card-carrying member of the XY Planning Network. Or check out NAPFA, the National Association of Personal Financial Advisors, for firms that are fee-only, fiduciary, and transparent about pricing, also in NAPFA. You can also search the fee-only network to filter by specialty, location, or planning style. As you can see, I practice what I preach. I really believe in really good conflict-free advice being available to as many people as possible. The 1% freak out. I used to spend a lot of my time on the phone with potential clients who were looking to hire my firm for financial advice. Once in a while, a potential client would say something like, I just don't want to pay 1% for something I can do myself. They'll follow up with, I'm more than comfortable with a flat fee, or I'd rather pay hourly. I just want to stick with index funds. I get it. A 1% fee on $1 million portfolio is 10 grand. That's real money. But here's what's also real. You've never had $1 million before. You don't know what you're going to do. You don't know what you'll be tempted to do. You don't know how much damage you're capable of doing. This isn't because you're reckless. I'm not trying to scare you. It's because you're human. You don't know what it's like to watch the market drop 30% while you're caring for a sick parent or a sick child. You don't know what it's like to get laid off the same month your kid gets into a private school. You don't know what it's like to get a windfall and immediately feel paralyzed by guilt, pressure, and a dozen people who suddenly need your help. That's what you're paying for, not just for asset management, or as I like to call it, portfolio babysitting. Not for some guy in a Patagonia vest tinkering with your ETFs. You're paying for someone to stand next to you in the middle of the storm and say, hey, let's not fuck this up, and then help you not fuck it up. The cost of good advice is real, but so is the cost of going at it alone and making irreversible mistakes. People don't want to pay $800 an hour for a lawyer until they're being sued. They don't want to pay $3,000 for a prenup until the divorce papers land and there's a 5-year legal battle over who gets the house and the 401ks. The value of advice isn't always visible up front, but you sure as hell feel it when it's missing. My job is to convince people to pay for something they've never paid for before, and most of the time, something they've never needed before. Something they may not even fully understand because they've never had enough money to feel the consequences of a bad decision. But I am done pretending that the DIY path is always the smart one. You want to try a backdoor Roth IRA using a loophole to get money into a Roth IRA even when your income is too high to qualify? Great. Just make sure it's not costing you major tax penalties because you didn't file the correct tax form each year. We correct a lot of these every year. If you've made it this far, you probably already get it. So stop playing defense with your money and start building your team. What that team actually looks like. You will eventually likely need more than one person to help you manage your money. A real financial advisor, a solid accountant, and maybe a bookkeeper. No one professional can do everything, and the good ones know that. Your advisor should be planning forward, investments, tax strategy, retirement, cash flow, goals. Your accountant should be translating your year into a tax return, while ideally helping you optimize before it's too late, aka before the year is over. And your bookkeeper, if you're self-employed, should help keep the wheels from falling off. You can't delegate your financial life entirely, but you also can't afford to DIY it forever. Most people don't need help placing trades. They need help making decisions. They need someone to say, you're overspending because you're scared, or you can afford to quit your job and start that business. The numbers work. Don't wait for a crisis. Every year, my firm gets at least a few desperate emails that start with, my accountant just died. Can you help me? I'm not exaggerating. Most people don't start building their finance team until something breaks or the financial anxiety becomes unbearable. But financial planning works best before you're hit with a crisis, before the layoff, before the windfall, before the fight with your spouse about who pays for daycare and who's allowed to take a sabbatical. So if your income is creeping towards $200,000, or your assets are, or your life is simply too complex to hold all the numbers in your head anymore, it's time not to become an expert, but to ask for and to pay for help. You don't need to be rich to build your money care team. You just need to be honest enough to say, this is getting serious and I don't want to screw it up. Remember, money changes everything. Here's my parting shot. You deserve advice that makes you feel smarter, not smaller. Go find it.